So we're going to show you now how to place a short put trade, and we're going to use Apple as an example. So we're in the Mosaic version of Trader Workstation. You can see our charts on the top left. Our quote of Apple, you can see it's currently trading at 110.27. On the right hand side is our portfolio. The bottom left is our option quotes, and on the bottom right is our orders and trade summary. So we're going to focus on the bottom left, and we just double click to bring that window out. So we're going to pretend we're interested in Apple. So I'd like to stress at this stage, this is just an example. We're not promoting this trade at all for Apple. We just want to highlight how easy it is to place a trade. So we know Apple is trading at $110. What we want to do is sell the May 6th, which is about 4 weeks from now, $100 put option. So in other words, we're saying to the market, you know what, we're happy to take the shares of Apple at 100. So we'll insure them for that value. And you can see here we're getting a bid price of 86 and an ask price of 88. So anytime you're selling anything, you're always going to get the bid price, which is 86 cents. So in other words, we're going to get paid 86 cents per share today for agreeing to buy Apple at $100 by the 6th of May. Now, we will only be asked to buy the shares of Apple if the share price of Apple drops below $100 on May the 6th. If it stays above that between now and then, nothing will happen and we will get to keep the 86 cents. No matter what, we get to keep the 86 cents. It's only when the share price drops below 100 that we have to actually go and buy the shares of Apple at $100. So remember, Apple is trading at the moment at 110.27. We're now getting paid 84 cents for agreeing to buy them nearly $10 cheaper. That's the benefit of this strategy. That's the real power of it. And this is the way an awful lot of powerful traders and investors in the world, including Warren Buffett, position themselves in stocks. Most people don't go outright and start buying stock. They use the short put option strategy to position themselves in companies. So we're going to go ahead and do that. And it's really easy to do it from this screen here. All we do is click on the bid price at the $100 strike. And that's going to bring up an order entry window here. So you can see here, it's automatically populated the Apple May 6th $100 put. It's giving you the bid and the ask price here. And we're selling. So that's automatically populated. Now we could change the quantity to 2, 3 or 4 here, but we're going to use 1. So that's okay. Now we're going to choose limit price. And when you're option trading, you should always choose the limit price because you're dictating to the market how much you're prepared to pay or to receive for the particular option trade. So we can see the bid and the ask is somewhere between 86 and 89. So we'll pick a haggle with the market and choose 87. We would recommend you always haggle. And then the last thing is we're going to choose a day order. And we would recommend with options that you only use day orders when you're trading them. And the reason is that if the market moves overnight, you don't want to have an order in there when you could be getting a better price the next day, because when the market opens for the first half an hour, the option premium spreads tend to be wide, and if you have an order in from a previous day, you could get filled at a below par price than what you could get. So we would also recommend that you only place your option trades when the market is open by at least an hour. So next thing we do is just click on submit, and we get our order entry and confirmation window here. It's saying, are you sure you want to sell the May 6th $100 Apple put? And it's saying you're going to pick a limit price of 87. We're going to take in $87, and this is our estimated trading commissions. As you can see, it's next to nothing. About $1 is what we're going to pay. Now here's the real benefit of this system here. If we click on performance profile, what you're going to see is a profit and loss table open up for this trade, and on the left hand side you're going to see a probability calculator. So this is telling us that we've an 89% chance of being profitable on this trade. In other words, there's only an 11% chance of Apple finishing below $100 or $99, around that level. So we've a really high chance that Apple is actually not even going to get down to $100. And this is why we use this strategy. We actually use it more often than not just to sell the puts, and we close the positions down early at a profitable trade. So we've an 89% chance of winning here, and down here it's just telling us what our profit and loss will be if there's a 1% move in Apple share price. So if Apple went down 1%, we're still going to make $85. If it goes down 10%, we'll only make $4. If it goes up 10%, we'll only make 85. So you can quickly see here our profit and loss situation for each move in the market, in Apple share price. So really, really useful stuff here for you. We would recommend that you learn to do your own profit and loss tables without depending on Interactive Brokers for them, because it gets your mind more focused on what this strategy does. So when we're done with that, we'll just X out of here and we click on Override and Transmit. And that order has now gone into the market. So we'll go and have a look and see what that looks like. So on the bottom right hand side, we'll just open up this window. You can see we've just been filled there. So you can see there's our Apple May 6 $16 $100 put sell limit, and you can see here the fill price was 87 cents. So we're after getting filled in that trade. I'll show you what it looks like now in our portfolio. So we'll open up our portfolio. And there you go, the May the 6th Apple. It's telling our position is -1. It'll show up as a -1 because we sold the put. We don't own it. Our unrealized profit and loss, we're down $2. That would be the trading commission. The market value will always show up as a minus when you're short on something. Again, you don't own the value in it, so it's a negative value. And the average price we paid after trading, or we received after trading commissions, was 85 cents, nearly $85.50 there. So that's how simple it is to actually go and place a short put trade.